c'est the team.
Ladies and gentlemen, welcome back. Chart Talk in the building. It's February 28th, last day of February. In the books, we got, World War III maybe popping off. The market's very volatile. So without further ado, let's get into the market outlook. All right, so the S&P, we experienced some harsh selling at the beginning of last week. And then, when Russia officially invaded Ukraine, we got that big gap down Thursday morning. No one expected it. And what does the market do? It rips higher from there. So then we were coming in today, could we maintain that strength with things looking like they're escalating over the weekend? And, we got a very healthy day of consolidation. The question on everyone's mind now is last Thursday's low, the bottom of this market. We still have major headwinds ahead of us. We still, this Russia-Ukrainian situation could evolve and get much worse, which, all signs look like it's going to get worse before it gets better. And, we still have the Fed raising interest rates in the next couple weeks. So we'll see what they do. We don't want to make any grand calls. We'll take it day by day with the price action. But that was very, very healthy and a very huge support area for us to bounce off of. So that at least we got some good news from the market from a price action standpoint. What are you thinking over there, Ben?
Yeah, so definitely, like I said, like short term, like that new pivot low 410 is like kind of the hard out. But like a little bit more medium term, or stepping back a little bit, technically the market is still in like a breakdown stage. We're seeing lower highs and lower lows. And until that trend really changes, and that's something you can see even more clearly like in the telecom space, that this sector has been breaking down, for basically this second half of 2021. And that same thing, lower highs and lower lows is that breakdown trend. And from that, you get a basing. Typically, after that, you get a basing stage. And then after that, you get a breakout stage. And what we're seeing in the SPY, if you can draw those kind of horizontal lines, you can see those lower lows and lower highs. So bigger, longer term, or more than this past weeks of trading, we're kind of still in an overall downtrend where until we can put in a new higher pivot low and a new higher pivot high, we're kind of still in an overall downtrend. But in the shorter term stuff, again, like the bounce from Thursday to today has been a very impressive bounce as we kind of run back up, and we'll see if the 200-day kind of continues to act as resistance.
All right, very nice. Where do we go from here?
We can go into some top ideas.
Yeah, so we were just talking about this before we started recording. We had all these alerts mapped out in the oil sector just for short-term trading, and it seems like all of them triggered, pretty much all of them except a couple. So not a ton of things on my radar after that. We'll go over those in good trade, bad trade. Mm-hmm. But, Exxon, it still has this descending channel. Nice little day today. So watching that 79 area for potential entry. And these are short terms. I'm looking to sell these into strength type things. Another thing that was funny that we were talking about before was that how you've been speaking for weeks how energy's just, after this huge run, it's not the place to be anymore. Mm-hmm. And then I come in this weekend and say, we're going to trade all energy names this week. Yeah. But, that's just, we have very different styles of trading, and we're looking at things very differently. I'm looking for a short-term pop. You're in it for the long term. You were buying VDE when it was a disaster all last year. It wasn't even on my radar. So in that space, I'm still looking for these names to pop a little bit with the everything going on, Russia, Ukraine, all that. Besides that, LPI is another name. What is that? 78 area, right there. Nice little consolidation above that area. Could begin to break out. And then there's a ton of names like a ton of these growth names. I'll bring up Zen for example. ZEN, Zendesk. This was one of those growth names that it was a market leader forever, and then market topped with all the growth stocks, and it became very weak. And now we're starting to see it come back, and it looks like it wants to go higher. The only problem is the risk is way, way, way too much to buy it now. Buy it here. I don't want to buy 118 and have a stop down below 107. If I want to make any money, that stock needs to go $20 in my favor, $30 in my favor. It's just asking too much in this environment. So I'm just keeping an eye on a lot of those growth names. Team was on that list. That had another day. There's TTD. That was another one. The thing is that you can't buy them here. They've just gone too far, too quickly off lows. So, it's important to get the shopping list ready for these type of times. But I don't think there's many, names to be buying out there right now after the 3-day move we've seen. What are you looking at over there?
Yes.
I forgot PKG. That's on the list too. But nice chart, but still needs to develop more. But all right, you go. Sorry.
Yeah. No, it's good. That was kind of like on this morning's pre-market call was, again, these names have gone, most names 6% off lows, 10% off lows. big back-to-back kind of bullish engulfing days that if you're looking to get in that third day up, it's like you're often looking to see losses there, and you have to kind of just be patient and let those things kind of reset. But there are some setups that are out there, other than some of the ones that you mentioned. So like SMPL, it's a food company. This like 40 level setting up. But again, this is like that example of it needs to set up. Like this is it's third day up. I'm not going to buy 40 tomorrow. Fourth day up. Like this needs to kind of pulls back in through 38, and you get that next leg up through it. Definitely much more inclined to buy it then than chasing it third or fourth day up. This SCCO, these were some again that members were calling out this morning in that pre-market call. Up through 70, same thing though. Third day up, you got to let it consolidate. MNRL through this 23. This is a financial name. Kind of going back to those recent IPO highs. If you zoom out, going back to like 2019, 2020, that 23 level was resistance. The name broke down significantly going into the pandemic and has worked its way back to those highs. And we find that this entry in these IPOs, when they get back to those highs, a year or two later, and they start to base out, often is much higher probability of continuing higher. Like we even saw with Snap. It took Snap almost 2-3 years to kind of base out, and then when it finally was able to take out those IPO highs, it was kind of off to the races, and it had that 100% run up from that area. A few other ones, we have this EQIX. I think Abby called this one out up through this 720 in time. We can see that from kind of end of December going into January was that breakdown stage that we were talking about kind of earlier with the broad market. Lower highs, lower lows. And then now from end of January into end of February, we saw it start to trade sideways and start to base. And now we can see like support is 660, resistance is 720, and eventually we want to buy up through that 720 area of resistance as it works its way back towards the 200-day and back towards those prior highs in that 840 area. So that's kind of one where we want to see that eventually with the SPY, where those lower lows and lower highs kind of shift towards the side and start to trade more range bound, and then we work way back up. Two other ones, we have this DLTR, Dollar Tree, went today, but pulled back again. Third day up, can't really expect much follow through, but this 144, 149 area, nice little earnings flag that's been setting up with some higher pivot lows. We saw the prior low at 123 area, and then more recently held at 130 during a little pull in. So this is still a nice looking earnings flag. And last but not least is this CINF, another financial name. Still setting up.
Dollar Tree has earnings tomorrow, the next day, by the way. Go on.
Yeah. Okay. And lastly was this CINF, Cincinnati Financial. This is in time up through that 128 area. Earnings flag, blue sky breakout. For now, kind of versed at 116, so still a bit wide, but in time, give it another month or two, this looks like could be a good one through those highs.
Very nice. All right, let's do good trade, bad trade. I'll go through all those alerts today. Mm-hmm. So we were talking about the short-term energy trade that was there today. We can look at a bunch of these names. There's Matador, MTDR, began to break out that 48. Very nice there. ROCC, really tight consolidation. This began to break out. We bought that one through 32. What else? FANG, this is the trade of the week. This began to get going today. Trigger was 136-ish for that one. That one's off to a nice start. OAS, here's another one. Off those lows. Trigger was that 129 right there. So you can see all these oil names that pulled in, they're looking pretty good. MGY, this was a great one. I saw Mai had this one. Shouts out to Mai. Through that, what was that area? That 2150 area. Off to a nice start. COP. I was gonna make this the trade of the week, but I chose FANG over the consolidation was a little bit tighter, but that one had the strength as well. CPE, this is the one I traded today. All I did with this name was I bought it and sold into the strength. It looks like it goes higher. The consolidation's really great. I just I'm just looking for singles and doubles in this market. That was a nice little single I hit today. And the CLR was another one off support. Right through this 53 area. So the alerts are popping today. Those short-term oil trades are really working out to start the week at least. I didn't really stick around to swing into these names, but there's some good day trades in there. And then last Thursday, I had the best and worst trade of my career. I bought the shit out of the market the first minute. I sold about 10 minutes later for like $2 and it went 30. A great entry, horrible exit. That's something I got to work on. I had a little too big a size there, and that's the difficult part about buying the open is like your stop is so ridiculously tight, being that first minute low that when you get that move in your favor in the first 10 minutes, you're inclined to take off some risk because my stop is such bullshit, but it ends up holding. It ends up holding the low of the day, holding the low of this move. It's probably a 20-year low in the market. So good entry, poor exit. And then Docs was the last one. I got out of this one. Shilly. I should have 15-minute ruled it, but I wasn't really paying attention to it. I was trading the S&P on that Thursday gap down, and when it kind of came back up to my risk area to where my stop was, I just kind of sold it. Which I didn't want to give it the extra risk, and look at me now. Yeah, I should have. I would have been in the money. So that was a poor job on my part. But that's about it. What do you got going on over there?
Yeah, I mean, even kind of what you mentioned with like the SPY trade was, and I've had a couple of these. Someone asked this question earlier today when they're like, when is it the time like you switch up your time frame and tighten it to more day trading stuff and away from the swing trading? And that was like what you mentioned with the SPY was like a perfect example where if like our skill set is like the swing trading, that's where the money is made. There's always going to be those small pockets of time where the day trading stuff is going to help make some money, but then you might, like in this example, you give away that really good SPY trade because of that. Yeah, and like I was just talking to Ricky about this, or it's like sometimes you're better off just not trying to be involved in everything and just focus on like what works best for you. For me, again, I have only one thing that's gonna be the worst trade, which is gonna be LMT, and this was one that I didn't. No, it's not even. It's bad just because I set the we set the alert for it. This was a name that I was watching for a little quite some time and missed it. So that's like just the bad trade of just me not being like near the computer enough that I missed that alert when it was my own alert. And it
was not an easy buy. It was not an easy buy.
But that was just something where it's like that was me saying like keep it on 400. It goes nearly 10% higher, and just guys are in it, which is great. And then it's like I wasn't there. So that's like my mistake of just not getting that order put in when this was one that I was keeping a close eye on.
I definitely think you can make the argument that in this market that almost sort of been like it's a tough buy. I'm telling you, I was looking at the chart a lot this weekend because it was like fuck, that was the trade of the day. When that war stuff came out, and it didn't make the move Thursday. It made a small move on the invasion. Then Friday is when it really took off. I was looking at it's still kind of chasing in this market where you want to be you got to be so perfect. And back to the point you were making before about you were saying switching up the styles and going to day trading and stuff. I look at the setups and I look at the trades that they're giving us this year versus what they gave us most of last year and then really all of 2020, the easy swing trading. It's like 20K is very hard to make in this market where a couple years ago 20K swinging it was so ridiculously easy. And it just goes to show the difference of a good swing trading market, and this is like a good day traders market, but it's still so difficult to do. I look at like the executions that you have to make and how precise you have to be to make some real money in this market, and it's just so much more difficult than swing trading the easy times. Yeah. So I'm definitely holding out for those easy times. Don't want to overexhaust myself. I recommend the same for everyone else out there.
Yeah, I feel like the last kind of year and a half has been like we'd be getting like a bowl of ice cream every morning for breakfast, and now it's like we're on like a vegan diet, and it's like we're getting salads, and we're like, this sucks. Like we want the ice cream back, and unfortunately we got to lose a little weight first before that's going to be a reality. But
okay,
that's it. Yeah. So you want to get into what book of the week? Oh, wait, what happened with the icon thing? I know you were saying that before. I don't think we went over that.
I've been a busy man. I've got to watch it. It looks really good.
No, the tweet. You said he was tweeting up a storm before?
Oh, Ackman.
Yeah. Oh, but I said icon, my bad.
Oh, he was tweeting up a storm at President Biden to how we needed to send troops over to help Ukraine. But, given his history, all we really know is that he's probably long LMT, NOC, every defense name you could name. Because all he does is, talk his book and then, try to profit off of it versus from, using his social following, things like that. He was the one who famously said hell was coming on CNBC when we were at all-time lows in COVID, and he was apparently long everything in the world and things like that. So Ackman being shady once again, trying to talk his book and make some cash. Can't blame the guy. I would probably do the same thing, but
It's funny if
I'm not a dick.
It's funny when we have like a little, you obviously know this, but for people watching this, we have a lesson in Semi-Smart that kind of goes over that specific time of when Ackman pretended to like lose his mind about the country during the pandemic and told Trump to close everything down and do this and do that. And he still has the tweets up, which I feel like is just like a middle finger to everybody of him just kind of saying like, I successfully pulled this off, where he basically tells you like the market's crashing, you just sell everything, everything's going to zero. And it's like, it was like March.
Oh, that's what it was. It was at the top. It was at the top, not the bottom.
No. So he was saying this was, I have all in the lesson, like I'll have Garrett put up a screenshot, but it has like the tweets, and it was literally like March 17th or 18th. He's like, sell everything. The world's going to end because Trump's not doing anything, blah, blah, blah. And then like 3 days later when we put it that low and balance, he's like, we just like locked in a $2 billion profit on our insurance premiums, and we are reinvesting it back into the economy, saving our country. He's like basically saying he's like God and like save the stock market.
Yeah, Robin Hood.
Yeah, and it's just like he's doing that same kind of parlor trick now, where like you can kind of do like he did that trick that one time like very openly, and like can he do it again? Like I don't know if it's gonna have the same momentum that he had on that.
Right. You fooled me once, shame on me.
But we'll see, because again, people forget. Like even for us, like I just remember, because I remember reading those tweets and specifically screenshotting, because knowing it was just kind of BS of what he was portraying, and then the fact that he still has them up, like he didn't delete them, it's just kind of hilarious that you can go back and see like the timestamps of what he was saying. But all right. Well, anyways, you want to get to book of the week?
Yeah. So I think I got this book from my mom. I don't know where the hell this came from. It's called The Celestine Prophecy. It's this old book about I don't know, life path and how everything that's meant for you comes for you eventually and things like that. It's about this old scripture that talks about different like keys to life in a morality sense and a spiritual sense. Not very much trading related, but that trading book I had, Noise, that I was so excited about. I left that in Denver for the past 2 weeks, so I can't read it.
Okay.
So I can't wait to get it this weekend and pick back up on it. So I started reading this. It's about this ancient manuscript in Peru. It has these 9 key insights to life. It's just one of those spiritual books. I always like these books. So I'm through like 2 of them. They're pretty good. But yeah, more of like the spiritual energy type book, the hippy dippy. It's not very market related. What you reading over there?
So I got the Airbnb story, which is obviously the kind of the starting and found up of Airbnb before they went public, and all their.
I read that. It's really good.
Yeah. I forgot. I think the funny part was in the beginning when they wouldn't let people list like their apartments, that you had to have the person stay in a room with an air mattress, like that was the requirement.
Yeah.
And there was like a guy in like a famous band had reached out to them and was like, "Can I just rent my apartment out?" And they initially were like, "No, that's not the point of this." And then after they're like, "This is like, why are we forcefully making it more difficult and less convenient for the visitors? Like, let's make it," and then like making that pivot.
Right.
But they talked with one of the founders of like why they, like the first investor who invested in Airbnb, and I forget who the person was, but they kept getting denied because it was just this ridiculous idea. And the first founder who gave him money, like I know Chris Sacco was a famous angel investor that passed on them initially, and the person who did was, the reason for it was they told the story about during like the inauguration with Obama, for them to raise money to like fund the website, they bought
cereal,
these like
right?
the Obama O's and the Kane O's, whatever. Yeah. And the guy was like, if these people were able to convince people to spend $40 on a box of cereal, they probably can make this business work. And like that was like the thing that kind of got them over the hump. They got to their first round of funding, and then it was like off to the races. But it goes into some of like the numbers at the end where it's like Airbnb has more like travelers, per day. And this is back 4 years old, so even now it's like the amount of travels they have now is like the equivalent as like the biggest hotel. Like I guess Marriott's the biggest chain. They have just as many visitors through the Airbnb homes as like the biggest hotel, chain in the world, and they have no inventory or no, cost to have those. They don't have to pay for like hotels and stuff. So it's definitely a really cool story. And again, now like I have a listing on Airbnb. I actually put up the like the track day event on Airbnb, so now you can. If you go on like experiences, you can find
like event. Oh, that's cool.
Yeah, so like I know they had experience in the past, and again we always use Airbnb with our trips, but now like I'm on like the host side, and now if you want to come to the track event, you can just sign up through Airbnb.
Oh,
and
the cool
they focus on like making it easy for the host, like payment wise. So they only charge you the credit card fee. Like the person who pays to go to the event will pay more, but I will, like, if I'm charging say $500, I will get basically 97 cents on the dollar of that deal, where that makes it just easy for the person just to get on there. It's like, why not list it on there?
Right.
So the fact that we buy this stock weekly, I have a little more conviction in it after reading this book, and it was a pretty interesting read for sure.
Yeah, no, big fan of Airbnb. Not lately though. I mean, everywhere I go is the fees are so crazy. It's like cheaper to stay in a hotel at this point.
Yeah.
It's funny how it works. But all right, that's all we got for you folks. Like, subscribe, comment, all that good jazz. We'll see you next week.